Good morning. This is Tom Alexander. This is the weekend update. Today is Sunday, February 25th, 2024. It is about 11:23 a.m. Eastern Time in beautiful Charleston, South Carolina. First, if you would subscribe and like the video, that would be very helpful for the YouTube algorithms as I try and grow this channel. I hope you find value in this. Everything that I am going to show you today is in written format. You can go to the website, alexandertrading.com, click on Weekend Update. It's free information. You can see the written report from this weekend, and you can scroll down and see weekend reports from previous weekends as well as videos. You can download a PDF of the charts, etc. So I hope you find value in this. Okay, a few general comments. We are in a bull market. We are in a bull leg within a bull market. Now, bull markets and bear markets tend to have distinct personalities. Bull markets are characterized by relentless trends in all time frames, intraday, short term, intermediate term, etc. The retracements tend to be shallow and short lived. Volatility tends to contract, and that's where we are. Also, in bull markets, and it's already happening now, you have people coming out of the woodwork with various forms of magic trying to pick the absolute top, and somebody will, but it won't be the same person that picked the last top or the top before that or the top before that. There is no quote unquote resistance from an objective perspective above recent highs in the index, SPX, or Dow. The Russell is its own animal. We'll get to that in just a minute. But this is a bull market. How do you know when it ends? Well, you don't know that it has ended until you can look back in hindsight and say, oh, that was the top. Now, is that particularly helpful? Yeah, actually it is. If you are willing to put your ego aside and the ego aside of all the people that you follow and just follow the price action. If the market is making higher highs and higher lows, that's the trend, regardless of why. You can fight it, argue with it, trade against it if you choose, but if you do that, you're going to lose money. I am well versed in all sorts of magical analytical techniques. I don't use them anymore because they're just a distraction and they keep me from making money. So I'll follow price action. Now, there are certain things that I do use to analyze the market that can give me clues about market condition. And if I know what market condition is, then I can develop a trading strategy. Right now, the trend is up. So in general, unless you are just trading a really, really small time frame, like an intraday time frame, you don't want to be shorting this market. You want to be waiting to get in the market. Let's take a look at some charts here. Okay, let's start with the SPX, which is probably the most followed of all the indices. But the SPX, the NDX, and the Dow are all pretty much in lockstep. Now, what you see on my screen is a market that is in a pronounced uptrend. That cannot be argued by anyone. I don't care if you're a fundamental analyst, a technical analysis, what form of magic you use, the market is in an uptrend. Above Friday's print high at 51.11 basis the cash, there's no previous trade. So there's no objective level really that could stop this trend. Now, could it have stopped Friday short term? Absolutely. And the immediate levels to watch to the downside would be Thursday's cash session low at 50.38, which is also the beginning of a huge gap that occurred on in Globex on Wednesday, and then you have Wednesday's low. It's that simple. Now, you can go down in time frame and you can fine tune this. You can go to an hourly chart or 240-minute chart, half a day. It's basically half a day, 30-minute chart, 5-minute chart, etc. But until this market begins making lower lows and lower highs, the trend is up. If you want to spend your time and energy and money trying to pick the top, that's fine. I would just encourage you to use some objective price-based reason for picking the top. And on a daily chart right now, there isn't one. Now, that could change. I mean, I'm going to show you something in a minute that is rather head-scratching that would have you maybe not pressing alongside, but staying out of the market is and missing something is a different situation than being in the market and fighting it and losing money. Okay, this is the SPX. Let's take a look at briefly run through all of these. Here's the index, similar, very similar pattern, higher highs, higher lows, giant gap. Where's the Dow? Here we go. Here's the Dow, similar story. And then last but not least, the Russell, which has been vexing for months and is sort of its own animal. And as I put in the written report, I'll get interested if and when the Russell approaches or breaks this upper level or approaches or breaks 1897. In between, it's just a complete chop fest. It is the proverbial redheaded stepchild right now. The indices, no one is interested in it. It's whipped around. It's a FOMO market. It's a FOMO momentum-based market driven by 6 or 7 stocks mostly. Okay, let's take a look at the profile view. And this is a market profile chart. And market profile is nothing more or less than a charting format. It's a charting format that emphasizes trade activity on the horizontal scale. And there are things about market condition that you can learn from using market profile and looking at a market profile chart that's more difficult to ascertain from a bar chart. You can, once you understand the auction process of development, once you spend some time with the market profile chart, you can basically see this information on a bar chart. This is where we close. Now, what is so unique about this particular view, excuse me. Now, let me clarify, each one of these units, each one of these profile units is 1 quarter of trade. Each slot, each letter is 1 week. So if I split this out, this is the first quarter so far. It's been straight up, and it was preceded by the fourth quarter of 2023, which was basically straight up once we bottomed in October. So the unique thing about this particular perspective that you get from the profile chart is how vertical the market has been in this time frame, and that's unusual. You can go back yourselves if you have market profile charts, and you can see what we are lacking now is some form of balance, some form of overlap in trade in this time frame that we haven't had. Now, this can go on indefinitely, but I'm just saying it will come to an end and you will get overlap in price at some point. That's just, it's more a heads up. It's more helpful in terms of defining what the market condition currently is. But the higher it goes, the more likely it is that we begin to get more overlap on a weekly basis than we've seen so far. Okay, let's take a look at the internal situation. Now, I don't use indicators. What you see on this page, you can say, well, gee, those are indicators. Well, yes and no. Basically, what this is, it is a way of viewing NYSE data, breadth data. The red oscillator-like thing down here is basically a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. And the blue histogram is closing breadth. Now, the thing that is glaring about this is the incredible divergence at the moment between price and the level of these indicators, with price going higher and higher and higher, and the 10-day moving average of NYSE not confirming, and certainly the 5-day moving average of NYSE advancing issues not confirming. Again, this can go on indefinitely. And this is creating a lot of cognitive dissonance among traders. And I admit it's keeping me from really pressing the long side of this market on an intermediate term basis, because yeah, we might be up 5% from where we are, but it's getting to the point where it's 50-50 where that next 5, 6, 7% move is. And that's not a great reward to risk. So this isn't necessarily tradable information, but it is objective information about what's going on. And typically, this is a situation that will not continue. It will be resolved one way or another, and it can be resolved in a bullish manner. It can be resolved by all of a sudden the powers that be in the market, the big money, start pushing the buy buttons, and the 10-day moving average begins to show an upward slope. The 5-day moving average begins to show an upward slope, and we get higher prices for some amount of time. Now, again, this is telling me that something is going to change sooner rather than later. So that gives me an idea if I'm a trader, I'll go down in time frame. I'll go to my hourly charts, half-hour charts, 5-minute charts if I'm an intraday trader, and be really, really careful to stay with the trend. Stay with the trend is defined by higher highs and higher lows, lower lows and lower highs. Guys, I hope you've enjoyed this. Again, if you have, please subscribe. Please like the video, make comments. Have a great rest of your weekend, and I'll speak with you again soon.